So last time we looked at companies. In fact, we defined companies. We looked at the law that regulate companies in Ghana. And quickly, if one of the professors can tell me what the name of that law or act is, I'll be so grateful. What was the name of the law or the act that regulates companies in Ghana? Yes, Gabe, go ahead.
Please, Act 992, 2019.
Okay, so you don't start from there. You start with the Companies Act. Companies Act. Act 99 Companies Act 2019 Act 992. Okay, great. So we define a company as a legal entity, right, which is formed by members normally called shareholders to undertake a certain course of action. We looked at the types of companies after looking at the features of companies, right? And about the types, we look at companies limited by shares, companies limited by guarantee, unlimited liability companies, and then external companies. We then also, got a glimpse of that these companies can either be a private company or a public company. And that is what led me into, assigning the activity for you to really know the difference between a private company and a public company as stipulated in the act, right? Okay. We also mentioned that the members of a company are called shareholders. What it means is that they acquire shares to be able to be members of the company. And I think I defined a share to be an ownership part or part ownership of a company. Exactly the reason why I also wanted you to appreciate the type of shares a company can have, right? Okay, now let's finish up with the benefits. Yes, the benefits and challenges of a company or forming a company. And then we'll go to the activity I gave you, right? So benefits of a company, I think as of now would appreciate that one, for companies limited by guarantee or limited by shares, the members enjoy limited liability protection. In other words, their personal properties or assets are safeguarded because we know that when the business falls into any misfortune, um, the shareholders would only lose their investment and it wouldn't go beyond that. Okay. And number two, easier ownership transfer. Yes, in companies, you can transfer your ownership from one person to the other without any difficulty. Unlike partnership, where you have to get all the partners to agree before you can transfer your ownership, right? Uh-huh. Enhanced credibility. Remember, this is a legal entity, right? An entity that is recognized by law. So if you are dealing with a company, you have that level of confidence that this is a credible organization I'm dealing with, compared to when you are dealing with, a sole proprietor, especially for those that are not registered, then it makes the case even worse because you cannot tell whether this person will run away or would be. But for companies, you are assured of that credibility, right? Because registered companies enhance business reputation and trust among clients and investors. And for all the types of companies we have mentioned, if you want to have that type of company, you would have to register. Okay, you would have to register. Okay. The next point is access to funding. For public companies, you can have as many shareholders or members that you want. Okay, in fact, so we say infinity. So imagine huge number of people bringing or contributing capital to run a business. Your access to funding, is huge. So companies can secure capital through share issuance, loans, and investment. The sole proprietor cannot do that, right? If the funds of the sole proprietor is lower, the company suffers, right? Okay. Then the part that it is also a separate legal entity. So if somebody sues the company automatically it doesn't mean that they are suing the owners, right? That is why if MTN Ghana is sued or taken to court, you don't see the shareholders lined up to the court to go and defend or whatever. Okay, it is MTN and not the owners. Okay. Then the perpetual succession bit. I think most of the benefits reflect in the characteristics or features. So let's look at the challenges. One, we say it is a complex, entity. And again, you'd have to comply with lots of regulations. So that's the point, complex legal and regulatory compliance. So they are subject to various laws and rules. Okay, imagine, I think you all felt a little bit of heat having to go through the act. So imagine if you are going to form a company, you have to read the act and know what is required of you to be able to form that type of business. Okay, so it is complex in terms of legal and compliance issues. Okay, higher administrative and operational cost. You remember I told you that the shareholders appoint board of directors who also then appoint general managers or chief executive officers, right? These administrative resources or human resources that you are employing, they come at a cost. And I think you can do a survey of how much board of directors charge or are receiving. Most of the times it's even tied with the profit the business or the company will make. Right? So imagine if a board of directors salary is like say 5% of the profits the business will make in a year. That is huge, right? And operational costs, even the registration process, you have to file, your application, and it's not free. You have to pay. Sometimes because you don't you don't have the needed skills or expertise or qualification to form a business, you have to employ people to do that on your behalf. And let me say this point, you can notice somewhere. The people that are employed, okay, to form a company or to bring a company into existence are called promoters. They are called promoters. So you can note that down. Those of you who explored the act, I'm sure you came across these promoters, right? So a promoter is an individual or another firm that is into the formation of a company. Okay. And all of these people, you pay them. So that is the rationale for higher administrative and operational costs. Then double taxation, because the company is seen as a separate entity, the government would require tax from the company itself. And likewise, the shareholders too, because they are getting dividend or returns from the company, they are also taxed. So that is seen as a double taxation issue there, right? So it says that the corporation in particular may face the challenge of double taxation. The corporate profits are subject to corporate tax. And when dividends are distributed to shareholders, they may also be subject to personal income tax. Okay, so that's the double taxation issue with companies. Then increased complexity in decision making. Yes, imagine, companies have what we call AGM. Note that one, AGM, called, or the full meaning, annual general meetings. At that meeting, all the shareholders are supposed to be present. And if there is a complex decision to be made where the board of directors, are having challenges as to what to do, they now bring it to bear for all the shareholders to put it to a vote. So you can imagine millions of people having to arrive at a common decision. Is very complex, right? Because people have different opinions and interests. The final challenge is potential loss of control. Okay, because the members are many, sometimes you don't even feel whether you own the company or not, right? In some books you see dilution of ownership. your ownership is diluted, because imagine as a student, if your textbook is owned by, say, 10 people, or one textbook is owned by 10 students, actually you don't even feel like you own it, because immediately you pick that you are going to learn, somebody can, I need the book. You have to give to the person, right? So potential loss of control or dilution of ownership control. Okay, so these are the challenges of companies, and profs, this is what the curriculum expects us to look at when it comes to companies. Any question before we, I think I'll take like 5 minutes of your time for us to look at the activity I gave you. Any question? Any question?
Please.
Majela, you have a question?
No.
Okay.
Please.
Then quickly, let's go into the act. So the assignment was, or the activity was all about you going through the act, right? And making brief notes about the difference between public companies and private companies, and then preference shares and equity shares. Okay. So let me open the act. Please, my art student, do you have another class from this one immediately after this one?
Yes, sir.
Yes, I believe so. So I think I'll take like 5 minutes of your break time, okay, so that we can look at the act and how I expected you to go about it. Okay, if that is fine by you. Okay, so I think we can all see the act on my screen, right? Or better still, you opened it so you saw. Now, if you are asked to pick information from such a voluminous document, 412 pages, your best strategy is to look at the table of content or the prefix to know where to find what information. So my first expectation was that when you open the act, look at how it is structured, right? So that's the name of the act. You see here, Companies Act 2019. And then you have, it's been grouped into chapters and sections, right? So I was expecting you to quickly go through the chapters and sections and find what I asked you to find. So if you go through, those of you who did it well, you see that you get to a point where you see types of companies, right? Right, and that is section 7. This is it. Types of what? Companies. Okay. So now you move to that section. Unfortunately, the act did not give us the particular page, but if you follow the section, is for you to get to section 7, right? So you also go down, and I think that of the shares is yes, from section 42 downwards, right? The issues about shares. So I was expecting you to now quickly go through the section. So let's go to section 5. Sorry, 7. So the sections are plenty here. And they give you some shadows on certain things. Well, we are only guided by the sections to follow and get what we need. I'm sure some of you were tired at a point when you were scrolling. So you see that when you come down, you see the chapters, and then they begin to tell you about the section 1, section 2, Okay, so let's go to section 7. Yes, and you see types of companies. So you appreciate the types that we listed: limited by shares, limited by guarantee, unlimited company, and then external company, right? Now, if you go down, then you see under section 5, section 7, subsection 5, you see a private company, right? Other than a company limited by guarantee is a company which, by virtue of its constitution, then you see the characteristics of private company. So A, restricts the right to transfer the shares of the company. So what this means is that for private companies, there is a restriction if you want to transfer your shares to another person. In other words, you would have to get the consent of other shareholders before you can transfer your shares. But that is not the case in public companies. If you go there, it says limit the total number of members and debenture holders to 50. So for private companies, the membership is from 1 to 50. Remember, one person can form a company. But in private companies, one person can form, but the maximum is 50. Now they say this does not include employees, okay, or people who were formerly in employment. Okay, so these are the differences I wanted you to give me. Now that of public companies, the membership is from 1 to infinity, right? Okay. Then another one is prohibit the company from making an invitation to the public to acquire shares or debenture of the company. So private companies cannot invite the public. They can only invite family and friends. Okay. So this is what I wanted you to do for me. Okay. And I think when we go to the shares bit, you would appreciate the preference shares and what equity shares. But I guess because of time, I'll pause here. If there are questions, I'll address them. If there are no questions, I will pause here and then, or I'll end the class here, and then I'll look at your submissions to see how well you did it. And I'm happy I've introduced you to the Company Act, because if you are going to be accountant and managers who be running companies, then you need to, be familiar with the Act. Okay, so any question, professors? Okay, go ahead.
Sir, please, the differences between the private and public companies, were we supposed to write it in points, or
were you supposed to do what?
write it in points, like A, private company is this, or public company is that.
Exactly.
B,
exactly.
That.
Or you could have, the style does not really matter. Somebody could have written like, okay, 1, private companies, in a private company, there is a restriction to transfer your right or your shares to another person. But in a public company, there are no restrictions regarding the transfer of shares. Okay. And then probably 2, the total number of members in a private company should not exceed 50. But that of a public company can exceed 50 to infinity. So you see, those who did not use the Act, I'm sure they will quote certain points outside the Act, and I'll grab them. I'm sure some of you put it in AI. Okay, but that's how I can fish out whether it's AI or you did it by referring to the Act. Any other questions? If there are no questions, let me leave you to attend to other things. I think accounting student will continue with accounting as well, right? Okay, so Prof, thank you very much for doing the activity. So the main aim of the activity is for you to appreciate the difference between public companies and private companies. Your curriculum does not make direct reference to it, but it's an important thing you need to know, as well as the type of shares. I think it's something you look at it later, but it's equally important you know now. Okay, so profs, thank you very much. I think I'll see the accounting student in accounting in the next 6 minutes. The rest of you, I'll see you on our page or in our next class. Bye-bye.
Bye, sir.